Alright, so continuing on, credit profile basics. Guys, you must protect personal credit at all costs. I have said this over and over again. Hopefully by now you've taken it down as a note. Personal credit will always matter. Even when you have business credit and you no longer need to personally guarantee it with the personal credit, there are things that you're going to want to do in life that's still going to require your personal credit. Again, this is a lifelong journey. And once you understand credit and you get through the lies and you get through the deceptions and you see the reality of it all, and you see the blessing that credit is, and you understand the gift that God gave man, at least in America and throughout various different nations, but specifically in America through the credit system, then you'll understand why you must protect your personal credit at all costs. Never, ever, ever max out your credit, ever. If you do, your score will fall by 200 plus points. Now, don't get me wrong, guys. There's times when you will want to max out your credit, and you're willing to take that 200 plus point hit. These are times when you are going to buy an asset that's going to make you income or passive income or some type of an income or cash flow. Okay, so there are times when you are going to want to max out your credit, but let's not depend on that, right? The goal here is to get to business credit, where basically you have unlimited credit and it doesn't matter what your utilization is, and none of these things matter on the business side. So we want to get to business credit. The goal is to build out a perfect profile on the personal side and get your score where it needs to be because you built your profile. The goal, again, business credit. That's where we want to get to, right? We want to get away from personal credit, but we got to get our personal credit right, and our personal credit score and our personal credit profile right, and then protect it at all costs, and then move over to the business side and do everything on the business side. Okay? But you need your personal credit on target so you can leverage it to build business credit. You are co-signing for the business. You don't need the net 30 accounts and these other things that they're trying to get you to do. You need personal credit to be right. Then you go start a relationship with the bank, and you establish a business bank account with that bank, a checking and a savings. You put some money in there, and you personally guarantee the business credit from your personal. They look at your personal score and they're like, okay, nice. They look at your profile and they're like, wow, this guy is incredible. This woman is incredible. Yeah, how much you need? Right? That's how it works, guys. You build personal relationships and you get your internal score, no matter what your FICO score. Remember, FICO is a corporation. It's not a part of your consumer report. Well, I'll prove this in later videos. Okay, it's not. It's just a corporation, a data center, a data processing corporation that establishes a FICO score. And there's FICO 2, there's FICO 4, there's FICO 5, FICO 8, FICO 9, FICO 10, and FICO 10T. So there's a bunch of different FICO scores. But there's a base model that all of these FICO scores run on, and we'll get to that in a later video. Okay? But it's important to understand that you're going to leverage your personal credit to build out your business credit, and then eventually you won't need your personal credit at all, except for minor things. Okay? So, relationship banking is the master key. Not net 30 accounts and these other accounts. Personal relationship banking is the master key. Build out relationships with banks and focus on the credit unions, because they're the ones that have credit building programs in place, whether it's secured loans, secured credit cards, secured whatever, or the ability to get a personal loan and pay that loan off the next month, and have payments showing up on your profile for the next 5 years, even though you basically paid it off all but about 10%. right? These are things we don't know what we don't know. Why? Because we've been lied to, we've been deceived. Why have we been lied to? Why have we been deceived? Because bad credit is big money to the serpents and scorpions. Okay? I'm just telling you the truth. Bad credit, they make more money on bad credit than they ever will with people with good credit. Good credit people, they get that 3% interest. Bad credit, 18%. Which one do they want? They're going to make more money on that 18% than they are on that 3%. Okay? We'll get into the details of all of this stuff, guys. It is what it is. Okay? We've been lied to. We've been deceived. Relationship banking can take you where other things cannot. Period. Can't cover too much of this on YouTube, but we'll cover what we can as we discuss building a profile. Banks have their own internal credit score. Okay? So whatever's going on with your FICO score, you got bankruptcies, you've got charge-offs, you've got late payments, you got all these things. Look, you can work on getting them off your report, but more importantly than that is establishing banking relationships where they will develop their own internal score, and their decisions on what they will loan you and do for you and how they will help you is based on that internal score, not the FICO score. They're going to look at the FICO score to get an idea, but they're concerned about what their internal score is and what relationship you have built with them. What is your history with them? What all of their products do you use? Are you making payments on time? They're looking at all that internally and not so concerned with what's going on externally in the FICO side. Again, FICO is a corporation that is just there for people for lenders and stuff to use to have a base idea of where you stand. Types of credit. This is absolute basics, guys. There's two types. Actually, there's three. There's installment credit, revolving credit, and there's also this thing called open credit. Okay, we're not going to discuss open credit, but there is a third type. What you need to be focused on is installment credit and revolving credit. So, installment credit is fixed payments. It is a set period of time to repay it. It is a set or varying interest rate, right? It might be a fixed rate or a, what is it called? A variable rate. It's car loans, home loans are typical examples, right? Basically loans, personal loans, student loans, car loans, all these things. That is installment credit. On the other side is revolving credit. There's no stated payoff time. Limit to credit. There's a limit that they'll give you, and they'll increase that limit with time based on how you use it. Minimum monthly payments. Interest rates may vary. Finance charges. Credit cards are the most typical example. So you have revolving, where you get a line of credit. You can use anything within that line of credit, and at the end of the month you have to make a minimum payment. And whatever from the minimum payment to what you owe, they're going to charge you an interest rate if you don't pay it in full. Okay? So you have revolving credit and installment credit. Now, this is where we're going to end this video, and then we're going to do a deep dive into the credit score. So revolving in the next video. So revolving credit and installment credit. Again, revolving usually comes with high interest rates. It's credit cards, that kind of thing. Interest only affects the money borrowers use. So only, if you have a $100,000 credit line, but you only use $10,000, then only that $10,000 is affected, not the other $90,000. Revolving accounts remain open so long as the borrower pays, right? As long as you don't become delinquent. Installment credit is the lower interest rates than the revolving accounts because it's fixed and it's a set period of time. Qualifications can be strict. There are lots and lots of documents oftentimes. Not always. There's low docs and no docs, but you want to get away from the no docs and low docs and ultimately get to the point where you do have to provide docs. That means you're making income, you got cash flow, you got all these things, and you can get massive lines of credit or loans. You borrow the money in a lump sum, so you get all of it at once and it's deposited into your bank. payback is scheduled. You're going to pay this much back per month toward principal and this much toward interest, including the end date of the loan. When does the loan end? Now, the mix of credit, which we'll talk about in the next video when we deep dive, this is what you want. You want to see revolving credit and installment credit on your credit profile. If they see these two things, it offers you access to capital. So if all you have is revolving and all you have is credit cards, you're not going to get as much access to capital or to the limit of capital that you want. Whereas if you had both installment credit and revolving credit, now you have access to whatever amount of capital you need. Okay, so it's having both types that give you the access to the capital. Now, I hope all these videos are bringing you guys value. Please let me know down in the comments, and if there's anything, if you have questions, put them in the comments. I'll answer them. I'm willing to work with you guys. All I want is for the truth to be out there, guys, so that people can start fixing their past and getting their profiles right, getting the funding they need, and be able to live the life that we were all meant to live. We got to come out of the lies, we got to come out of the deceptions, and we got to get to the truth. Ultimately, I want to build a community of truth, right? Everyone has a truth in a certain area of life that they've learned that, hey, I was lied to, I was deceived, and they went out and they took the time, and researched and studied and came to the truth. I want a community of people like that, right? Where you have people that have no knowledge, no understanding whatsoever, they're completely lied to, completely deceived, no clue what's going on. And then other people in the same community that have taken the time to do research, to study, to come to the truth and to discover the truth and be able to unravel the lies and deceptions for you, and have a community where everyone is helping everyone to come back to the truth. Because it is the truth that sets you free, period. Period, right? These gurus and these corporate credit programs that want to come out here and charge you and force you to go buy things you don't need on Net30 accounts and spend all your money away and just so that they can make a commission. It's nonsense, guys. It's all nonsense. Okay? The truth has to come out. And it is going to come out. And it is coming out. It's coming out everywhere. It's not just in the credit world. It's coming out everywhere. Good times ahead. Even though we're going to go in a recession and do the things that we got to go through, good times are ahead because the truth is being revealed. We'll catch you guys in the next video. Again, I hope these have been of value to you. And let me know in the comments if you have any questions or comments or negative, positive, I don't care. Give the video a thumbs up, guys, or thumbs down. If you don't like it, thumb it down. But give it a thumbs up or a thumbs down. That way I kind of know where you guys are at and where I need to go with the videos. So peace out. Catch you in the next video.